Hi everyone, let's continue theory of distribution. Under theory of distribution, there is the one important theory related to profit because one of the factors of production is profit. So profit, how we can define term profit, what is profit, as well as what are the modern theories of profit we are going to discuss in this video. So profit is the reward for the services of the entrepreneur, and the excess of income from the sale of output over a firm's cost of production is called profit. How we are going to calculate profit? Let me show you. This is the, yes, profit is total revenue minus rent minus wages minus interest. So these are the total profit. Where is the total revenue? We will deduct from total revenue rent, wages, and interest. Profits may be considered a reward for making innovations, a reward for accepting risk and uncertainties, and a result of market imperfections. So, where is the one of the theory of the profit said high risk, high gain, no risk, no gain. So profit is entirely related to the risk and what is the reward against this you are getting. The term profit used in two sense. One is gross profit, another one is net profits. How could you distinguish between gross profit and net profit? Let's understand. Gross profit means it is called profit is a gross profit. Profit is that part of income which is available to firm after all payments to the three factors of production. Three factors of production are land, labor, and capital and being made and when all obligations as taxes and depreciation charges have been met. So means we had already given, I mean, all these things we have to do, depreciation part as well as taxes part, all the obligations we have to meet. Example, a firm earned revenue of 15 lakh. Here is, you can see, firm earns revenue of 15 lakh rupees from the sales of production. It pays 10 lakh rupees to the workers and the capital in the form of the interest, rent to land and depreciation charges and taxes, etc. So gross profit is 15 minus 10 equal to 5 lakh rupees. So gross profit includes elements like wages of management, rent on entrepreneur's own land, and interest on his own capital. Then we come to the, that is gross profit. Then we come to the next concept is net profit. So net profit are the profits which occur to an entrepreneur for his functions as an entrepreneur. These functions include risk bearing ability, innovative spirit, etc. The economist defines profit as the excess of the sales receipt over explicit plus implicit expenses of the production. I had already explained you in my previous video. I will share the link in this description box. What is explicit and what is implicit? Cost and profit. So net profit includes five components: payment for risk and uncertainty, because net profit means we are talking about payment for risk and uncertainty, and probably reward for bargaining ability, reward for innovations, and monopoly gains and chance gain. So gross profit we can define. This is the equation. Gross profit equal to sales minus explicit expenses, but net profit means you are including gross profit minus this gross profit minus implicit expenses. Implicit expenses means those are not actually reflecting on the balance sheet, but still you are bearing, right? You have your own building, own land, own capital, own services as a managerial or as a entrepreneur. So these are the all these costs those you are bearing. That is net profit. So here is again I'm going to decide what is the difference between explicit expense and implicit expense. Explicit cost is a cost that can be easily identified, such as like actually you are paying wages, rent, materials, etc. That is reflecting on cash outflow and clearly reflecting on your balance sheet. So from business, that is decreases its end result profitability, and this cost directly affect the revenue because these are the expenses from your side. And implicit expenses means implicit cost refers to the imputed estimated value of inputs owned by the firm and used by its own production units. Like, for example, the entrepreneur may contribute his own land, his own capital, and may provide entrepreneurial and managerial services. Thus, in case of such factors, a production that firm neither purchases nor hires, the cost must also be calculated, like costs need to be imputed from what they could earn in their best alternative use. Such cost is known as implicit cost. Means, if suppose you have your own piece of land and you are not giving on rent, so you are using in your business, so otherwise you, if or best alternative, you can give on the rent and you can earn some amount. Same way, suppose you had invested 1 cr capital in your business. If suppose you are doing lending in the market, so you can earn rate of interest, but you are not earning any rate of interest because you had invested this amount in your own business. Same way, if you are working somewhere and you are getting salary of, let's say, 1 lakh rupees per month, but due to, because you are entrepreneur or as a managerial position, you are managing your own business, so you are not getting any salary. So that is best alternative, that is also known as imputed cost, or we can call it imputed, that is implicit cost. So business profit and economic profit, same way we can define. We had talked about the cost and now the business profit and economic profit. Business profit, that is accounting profit, as I said earlier also. In business, accounting profit means that is actually reflecting on your balance sheet. But business profit, that is, we can define total revenue minus explicit cost. Here is, we are not including here implicit cost, only we are including explicit cost. So economic profit includes both explicit and implicit cost of profit and cost of production. But in the economic profit, you are including both these things, explicit as well as implicit cost. Implicit cost, as I said earlier also, your own investment, your own services, your own property, you had already giving to your business, and otherwise you can earn a handsome amount from market. So that is economic profit. So I'm sure this difference between business profit and economic profit is clear to you, and explicit expenses, implicit expenses are clear to you, net profit and gross profit is clear to you. And I hope next video we will discuss some more concepts related to profit, and after that we will in continuation discuss some theories related to rent, some theories related to wages, some theories related to interest. So I hope this video would be helpful to you. Thank you. Keep watching.